Good afternoon, everyone, and welcome to Stock Market Today on this Thursday. It's Alyssa Corum here, and I'm joined by Ken Shreve, and we'll get to analyzing the action for the major indexes. But first, Ken's got the skinny on the stocks that we're going to be analyzing today. Hey, Ken.
Hey, Ali. Yeah, kind of a rough day for the stock market. Nasdaq down more than 2%, but we're going to take a look at a stock that bucked the trend, Cintas, as well as some selling in shares of Tesla and Apple.
That's right. But first, a look at the major indexes. Now, we were hovering right around the flat line for the beginning of the day, and then it kind of just got worse from there as the session wore on. The Nasdaq ended up closing down about 2.3%. The Dow Jones closing down 1.3%, and the S&P 500 down 1.2%. Now, Ken, typically when we've seen the Nasdaq pull back to the 21-day line, that's been followed up by a reversal or some sort of rebound. But I guess we'll have to see how tomorrow's session goes. It was able to come off of the lows a little bit, but got dangerously close to that 21-day.
Yeah, this was just not, it's hard to sugarcoat this session. It was not a good session for the NASDAQ. I suppose the fact that it held above the 21-day moving average is fine. But what most concerned me about the session was that, volume seemed to be getting heavier and heavier and heavier as the session wore on. So right now it looks like NASDAQ volume is going to be maybe 8 to 10% higher than what we saw Wednesday. So if that holds, we would count this as a distribution day or a day of institutional selling. But yeah, we'll see. We'll see what tomorrow holds. But that 21-day moving average has been a support level for a long time for the Nasdaq.
Yeah. So in terms of what investors should be prepared for tomorrow morning, and as the session wears on, we need to be keeping an eye on that 21-day and see if it can continue to hold as that support level that it has been. But if not, maybe the market is finally changing tone, and we've said that it might even be healthy if it started to pull back.
Well, I think everybody, not just us, would like to see the market consolidate and take a little breather. I mean, there are a lot of extended stocks out there. There are a lot of stocks that could take a breather themselves, but. Listen, earlier this week, Monday and Tuesday, the NASDAQ bumped up against that upper channel line. So we're seeing signs that it could be ready to pull back here. But again, that the charts are such a great visual that 21-day moving average has just been a repeated support level. So we're watching that level closely.
Yeah, well, we'll take it one day at a time. And first on our list, CTAS, Cintas, popping up on our radar, bucking the downtrend, like you said today, Ken, up almost 5% here, above average turnover, breaking out of this nice cup with handle here. And it's always good to see that relative strength line hitting a new high, confirming that breakout. And this move comes on the earnings report. Even though we didn't see too good of numbers here, investors still liked what they saw in that report.
Yeah, most earnings reports that we've seen in recent days and recent weeks, a lot of companies showing declines in earnings and sales because that's when really the pandemic started to really affect results. I mean, Chipotle today, big earnings and sales declines from a year ago. Not the case with Microsoft, pretty good earnings there and good top line and bottom line growth. But Cintas, yeah, I mean, as Ed Carson was saying on IBD Live this morning, there's just a lot of economic recovery stocks that it makes sense that they're rising if we continue to see signs of improvement in the U.S. economy. Cintas is a uniform maker to more than 1 million clients around the world. So improving job market, improving economy, business should be good here.
All right, and moving on, also reporting earnings. Last night we had Tesla, and it was up in after hours, but it quickly reversed early in the session, closing down about 5% for the day, even though it did have a solid report here, Ken. So talk to us a little bit about how investors should approach this kind of action with Tesla today.
Well, you can see over the past, several trading sessions, trading is starting to get very, very volatile in the stock. You can see these big intraday price swings, including today. I mean, was particularly volatile. The market's reaction to the company's earnings report was initially positive, and then, the broad market started to bleed, and Tesla followed the broad market lower. It's waging a battle here at the 1500 level. That's a good round number where it's not just, surprising to see buyers and sellers duking it out here. A little bit of a close below the 10-day moving average that you can see. And I'm sure a lot of people that bought this stock at the last breakout, right over right around 900, yeah, down in that area. That's when we added it to Leaderboard, but a lot of people that bought there may wait and see what a test of the 21-day moving average looks like, and if it breaks through that support level, then it's definitely a time to take partial profits at least.
Yeah, and this is also a great example of why you don't want to speculate right ahead of an earnings report. You could get caught in something like this for those who bought yesterday.
Yeah, I think people with a big profit in this stock, there's really no reason to sell at this point. But again, you just watch if it eventually makes it down to the 21-day line. That is a key support level to watch. But right now, we'll see if 1500 holds because it looks like it did hold today.
Very true. All right. And last but not least, let's check in on Apple, AAPL. And while we did see the Nasdaq holding support at its 21-day line, not the same situation here for Apple today. And Ken, it's been pretty incredible, this run up for Apple. It was finding support at its 10-day line the whole way up. So now today, to see it falling and closing near the lows below that 21-day line with a decline of over 4.5% in heavy volume. Could this potentially be a warning sign for Apple investors here?
Well, again, we were just talking about Tesla. Is it, if it will it eventually, if it comes down to its 21-day line, will it find support? So I think people with a nice profit in Apple. I mean, listen, there's some people with conviction in the stock. They're saying, my profit is so good, I'm going to wait and see what a test of the 50-day moving average looks like at around 350 or so. Other people might look at the break of the 21-day line today in heavy volume and say that was enough reason for me to take some partial profits here. But it was what was most concerning about today's session. We did see some volume, downside volume in the leaders. We didn't look at Microsoft, but they reported earnings and it was not a good reaction to earnings. And same with Chipotle, a negative reaction to earnings. So with Apple, there were a couple of headlines today. Goldman Sachs came out and said that that the stock's recent rally is unsustainable and that the stock should be avoided. So that fueled some selling. And then there were also some unconfirmed reports that the iPhone 5G iPhone launch event might be delayed later this year. So that weighed on sentiment today for Apple.
Yes, for sure. Well, we'll keep tabs on Apple, no doubt. And Ken, you mentioned leaders, which makes me think of Leaderboard Free Access Week, which is going on right now. You can check that out. No credit card required. But for those who are uninitiated, give us a brief rundown of what Leaderboard is all about and what you guys are doing with that.
Well, really what it is a model portfolio. We've got about 19 or 20 stocks in that right now. We trimmed a couple of positions today, and this is just it's a model portfolio of top-rated growth stocks. So even with today's weakness, we saw some disconcerting action in Amazon and Netflix, some big percentage declines. But the profit cushions are big enough that we're still going to give these stocks a little more time. But definitely concerned about the selling. Definitely that we saw in growth stocks today. But Leaderboard, we annotate buy points on the charts, and it's really an educational tool, but it's also a great tool for stock ideas, and you can follow basically our moves in real time.
Yeah, and the portfolio has done very well because we are buying these stocks at the right time, not just willy-nilly. And for more details on that, we had a webinar earlier this week called The Stock Price is Right. So make sure you go check that out in our webinars section under the videos tab in the main navigation as well. All right, everyone, thanks for joining us today, and we'll see you right back here tomorrow to cap off the week.